traders, my name is Mike Hamilton. I'm the founder of Trade the Easy Way, and I'm just going to talk to you for a couple of moments about Trade the Easy Way membership, and then I'm going to go on to my usual plan for the week ahead. And a busy week ahead it is, with the Fed meeting on Wednesday with a potential rate rise. So before I get on to my plan for the week ahead, I'm just going to talk to you about membership, because membership has now been upgraded. And if you are a day trader, a scalper, then the full membership is perfect for you, because we operate the trading room 4 mornings a week, Tuesday to Friday morning, 8 to 10 UK time. And then we also plot pivots for the US session, and then I talk about price action that's going on in the US session through our text room, not the normal webinar room that we have on the Euro session. What you also get as a full member is a video each day and access to Traders Roundtable. Traders Roundtable is 7 PM Monday night, which is 2 PM Eastern time. We look at stocks and Forex in great detail. We've got a full Euro session and half a US session behind us by the time that opens. And there's an opportunity to really get to grips with the potential moves that are coming up in the market. Look at the data that's coming out and the potential impact on these charts that we are trading. If you are an investor and you don't want that access to that trading room, then you can get access to the daily videos, which include stocks and of course the Monday night Traders Roundtable, which is a vital part of the week for us. And we really open up the big picture. We look at commodities as well as indices, and particularly stock sectors that we think are the most active and offer the greatest potential. Obviously taking into account the period that we're talking in and the part of the cycle that we're in, and then looking ahead as to whether you should be thinking about getting into stocks or whether you should be thinking about liquidizing some of your assets and sitting in more cash levels. But anyway, so those two options are there for you, but if you want full membership, you have to have had the pass on your Scalper School course. So to get into the trading room, you need to have done the Scalper School course, which brings me on to what's going on Thursday, because at 10 AM UK time on Thursday I'm doing a 45-minute introduction to exactly what the Scalper School is now, and I've revised it for those of you who've been on it before. If you've been on it before, you do get a drastically reduced price, and I'll update you on what I'm doing. There's a couple of key elements on there that I've refined to improve our productivity and improve our pip rate. So the webinar that's 10 AM on Thursday morning is completely free. It's part of a session that's running all day, put on by another organisation, which I will introduce you to and send you a link to through the end of this video. But I'm speaking the second slot at 10 AM, and like I said, it's a very short, sharp 40-45 minute opportunity to look at what Scalper School can offer you and ask me questions. Alright, so moving on to this video ahead, I'm just about to go to the charts, but like I said, we've got that Fed day coming up on Wednesday, so I suspect we may see some hesitancy in the markets despite that drastic drop in the pound on Friday. And it's very, very late in the day. It happened after the London close, which is unfortunately it's typical of a triple witching day. Triple witching is when the options on the indices expired, when the futures markets switch over to the new contracts, and it's where the stock options expire as well. That's why it's called triple witching. You tend to see markets gravitate towards key numbers, and as time goes on I'll talk to you about that. But in the meantime, let's get to the charts and just wait for, or look in the email if you've seen this on the email, for that link to that Scalper School introduction on Thursday. Alright? Right, charts now. So I'm kicking off with a look at the, what are they, 20-year Treasury, US Treasury bonds. So you can see we have been moving up nicely, typical ways, then we break. So we get above this level here, and we break, we pull back, and then we run. And then we struggle at these highs throughout the summer. So so what does it tell us if we've come off? It tells us that the markets are anticipating a possible rate rise. If money is coming out of the bonds, the yields are going up because there's anticipation that the US might be about to raise rates. So yeah, is this just going to come back down here to this 200 EMA and then bounce back? So this scenario is suggesting that we get the bounce back, we get to Wednesday, the rates don't change, so the bonds just start their usual climb up again into resistance. Otherwise, if we do get a rate rise, then these bonds will break this low here and then roll over. So at the very least, the market is suggesting there is a probability of a rate rise at the very least. So let's now look at the indices. Indices normally have a divergent relationship with rate rises. So if rate rises are going to go up, markets don't tend to like that. They could come out of this. At the moment, the Nasdaq actually closed higher. The Nasdaq chart looks a little bit like that, but this Dow with the heavier industries and the bigger organizations is a bit clumsy, a bit heavy. So if there's a bit of a hangman there, so if we can't, we're just narrowly holding above this. If we continue to close above that on Monday, then we could at least crack into the top of that resistance. And at that point, that'll be the decision point. Either we close higher and we run, or we roll over. So Monday's close is going to be interesting, but at the moment we are trapped in a range, and I'm not interested in that market at the moment. The pound, on the other hand, pound versus the US dollar, has made its move. We were struggling. Sorry, let me get rid of that line. We were looking good into early September. Came back, poked above this trend line here. So it looked okay, but then we stumbled in the middle of the week, and then, like I said, after the London close on Friday, we fell all the way down to 130. So I'm looking for a pushback to the London close, which will put it at least just under the 131 level. So if we come up to that resistance, that's 131.40. If we come up to that level at some stage in the first half of the week and then get a sell signal, I'll be interested. The markets have literally just opened, and we are just gapping up marginally in this particular chart. You can just see a little bit of price action creeping into the screen there. Okay, so that's what I'm looking for. I think the short setup is low risk. High risk, because we have all this trendline support underneath it. Hence the reason why, if I'm going to get short this, I want to return to the London close. The other chart I like is, of course, the US dollar yen. I got a small move out of this, literally only about 35 pips on Friday. I was hoping for a push higher, and it didn't happen. So we've closed. This is an 8-day moving average and a 20-day simple moving average with a 200 up here. So the chart pattern is saying a lot. We are trapped in this range. So we've had 1, 2, 3, 4 tests of this trend line, which have been rejected, and then we have this major support underneath it. So we're in a wedge with a slightly higher close on Friday, but not convincing. So I would be interested to see if we pop under 102, something like 180. I'd be interested to see if that holds intraday, and then we get the push up. Otherwise, this could just fall out of the bottom. And we've had a lot of selling, push higher, a lot of selling, push higher, a lot of selling. So we've got ourselves into the apex, and we need to make a decision. So that's my plan. I'm going to look at a lower level on this one. Anything between 130 and 180. If I get a buy signal down there, and we have gapped down on this one, just as we gapped up marginally on the pound US, we have gapped down close to 102.20 on this. You can just see 102.18 recording on the screen on the right. Okay, I've got a really interesting stock scan, which I'm going to share with members on Monday Traders Roundtable. If you are not a member, then and you have done the Scalper School, you're eligible for full membership. Otherwise, hook up on the part membership, which is a fair bit cheaper, and then you'll just get the Traders Roundtable and the daily videos. Alright, I'm going to leave it there because I want to save myself until we get a lot of the Monday trading out of the way, Monday price action out of the way. It's very quiet on data on Monday, and then of course we start to see some data come through on Tuesday, and then Wednesday is the big one with the US rates. Alright, so any information you would need in addition to what I've said here in this video, then let me know. Otherwise, I will see you in the room if you are a member. Thank you very much, and bye for now.